The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. Thanks very much for tuning in. Don't forget, my show airs every Tuesday and Thursday, just 2 days a week on TFNN from 3 to 4 Eastern. It's a call-in talk show. Give me a call, 877-927-6648. Let's talk about this market, where you see this market going. Let's talk about setups if they're out there. Not many that I'm seeing right now, but every once in a while you see a stock acting well, showing strength. Let's see, you can get my show as a podcast on iTunes. I always remind you about that in case you can't listen live. Just go over to iTunes and you can download the podcast. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do, right in your smartphone browser, just type in tfnn.mobi. That's easy. Then click Listen Live, and you can listen on your smartphone. And I'll be going over charts on the show today. If you want to look at those charts right along with me, you can do it on Tiger TV, Channel 1. The show is archived on Channel 13, and Tiger TV can also be viewed now on your smartphone. Pretty darn good picture, so check that out as well. All right, let's see where we're at here. We got about 50 minutes left to go in Tuesday's session. And not a bad day for the market at all. S&P 500 up near its high for the day, up 6.5 points now, 0.5%. to 1274. 1274. See, it's still just right at its 200-day moving average here. Last week, that really crummy jobs report, I haven't had a chance to talk to you since that employment report Friday. Really crummy. 69,000 jobs created, well below expectations. Saw estimates for 150,000 all the way up to 175,000. So very bad job growth in May. Unemployment rate at 8.2%, and you had downward revisions to March and April as well. So not good news, but that caused a big drop in the S&P 500 on Friday, below its 200-day moving average. Now it's trying to get above the 200-day line. The 200-day moving average for the S&P 500 is 1285, and S&P right now, just right at that 1285 level. So in the end, it's only day two of a rally attempt for the S&P 500. So does the market feel like it wants to go higher? Yeah, maybe. You know, I could see the argument for a little bounce here, maybe a tradable rally. Still would be good to see some follow through. So, you know, Monday being day one, today being day two, the earliest we'd want to look for a sign of strength in the major averages would be on Thursday, day four of the rally attempt. Maybe we get it Thursday, maybe we get it Friday, sometime next week, but not really interested in moving in from the sidelines at this point. As we've been talking about in recent weeks, a lot of damaged charts out there that, in my estimation, are going to take some more time to repair. That said, there are some good movers today. We'll go over those in just a little bit, but you'll see the common theme when we're looking at these charts. You'll see nice percentage gains, some former leaders in the first quarter acting well today, but still technically troubled, and it just remains to be seen where the new leadership is going to come from at this point. So let's take a look at the NASDAQ composite. See that it is doing okay as well. It is up 15, almost 16 points. Call it 0.6% to 2775. The NASDAQ composite, you can see, is back above its 200-day moving average, but in the end, only day two of a rally attempt for this index as well. Volume on the New York Stock Exchange and NASDAQ today tracking a little bit below what we saw on Monday. Not much volume in the market on Monday. NYSE volume pretty much average at 815 million, tracking a little bit below that today. NASDAQ volume on Monday, 1.7 billion, also average, tracking lower than that today. So all in all, not bad. Day two of a rally attempt. Too early to get excited here. We have the European Central Bank with their meeting tomorrow. We'll get a decision on interest rates. Do they leave rates where they are, or do they perhaps lower rates? Certainly not out of the question, so that'll be a big headline early tomorrow. Taking a look at some story stocks today, let's take a look at Starbucks. Why not? Starbucks under some pressure today, down $1.48, almost 3% to $52.42 to its credit. It is trading up near its session high. It hit an intraday low of 51.63, but they announced a strategic acquisition. They're acquiring San Francisco's Bay Bread as well as bakery chain La Boulange. Boy, I like saying that word, La Boulange, for $100 million. So a small acquisition. Some are saying that Starbucks might have overpaid. They're getting 19 bakeries and a baked goods distribution business. But yeah, it probably fits with Starbucks' strategy. Certainly a lot of people like to buy the muffins and the bread at Starbucks. Starbucks obviously sees some brand value here in Bay Bread and La Boulange. So we'll see where that takes the company. Starbucks, just an example of a base building stock here. Resistance at its 50-day moving average, comes back down. 50-day line is at $56 a share. Again, currently trading at 52. So when it eventually starts to rally, you're going to have to see if new money is coming in from the sidelines, and there's heavy volume in the market and heavy volume behind Starbucks. When it does eventually start to rally, that should be enough to, for it to be able to get back above the 50-day moving average. Remember, when stocks eventually start to form the right side of their bases here, the more volume you see behind the gains, the better it is. That's what makes a constructive base, and your new leadership is eventually going to emerge when stocks build the right side of these bases and then eventually break out over their highs that were, made in early mid-April thereabouts. So Starbucks not a buy right now. Certainly it is on sale, coming down from $61 a share down to 52, but also a stock that has been under some quite a bit of selling pressure. So it's going to take some pretty stiff buying demand for this one to continue higher. Let's check in on shares of Apple today. Last I saw, the stock was underperforming. An up day for the NASDAQ, and Apple is down $2.29, only 0.4% to 562. Another base building stock here. Remember, you had that big gap up in late April when Apple reported another fantastic quarter, and then there's been institutional selling in this stock. So the question is, will the 50-day moving average for Apple, currently around 585, will that prove to be a resistance level for the stock or not? If it is going to get back above that line, it is going to have to see renewed signs of institutional buying, and that frankly is a very big question mark at this point. Very quiet week of economic data. We did get a reading earlier today from the ISM Services Index. Remember last week we had that really bad jobs report, and right along with that jobs report, we actually got a pretty decent reading from the ISM Manufacturing Index, which was surprising to many because recent manufacturing data have been pretty weak, actually. It started in mid-May. I think it was the Chicago PMI that was disappointing. No, it was first the Philly Fed. That was in mid-May. The Philly Fed was very disappointing, came in at a negative reading, and then the Chicago PMI just recently was also weaker than expected. So the ISM Manufacturing Index last week on Friday actually was not too bad. Pretty much came in as expected. Today the ISM Services Index came in slightly better than expected at 53.7. So decent news there. Tomorrow we've got the Fed Beige Book. That's basically anecdotal information about economic activity across the Fed's 12 districts, and then pretty much that's it. Thursday, weekly jobless claims. I think they're expected to fall a little bit to 375,000 thereabouts. All right, let's check in on gold here. Take a look at the GLD. Gold definitely finding a renewed bid here, no question about it. The Spider Gold Trust down 31 cents today, 0.2% to 157.01. But you did have a huge gap up on Friday, and it is holding its gains smartly here. Okay, so there's definitely renewed buying interest in gold. Not surprising, again, that weak jobs report. All of a sudden, people are thinking it's not a matter of if the Fed is going to launch new quantitative easing, but when. And if that ultimately weakens the dollar, which many think, that should be good news for gold bulls. So, but as you can see, the GLD, like clockwork here, trying to get back above that 50-day moving average. You can see how these moving averages are important. When you see them on a chart, it's a ceiling right now. But if gold continues to attract buying interest, we could see it easily get above that 158 level. Gold bullion today up $3, not much, 0.2%, settled at $1,616.90 an ounce. Again, ahead of the ECB meeting tomorrow. Let's check in on Royal Gold, one of my favorite gold miners here. Royal Gold also holding gains smartly. Actually, looks like it's extending gains now for the third straight day, up another 63 cents today, 0.8% to 77.63. Very good fundamentals at Royal Gold. Good annual earnings expected this year and next year. Is a pretty high quality company here, Royal Gold. And out of all the gold miners, I mean, this one is showing the most relative price strength, no question about it. You can see it's getting very close to its January high set back here. What was that, about 78 bucks a share, thereabouts. So RGLD could have more left. So gold definitely attracting buying interest here. Oil up 31 cents today to 84.29 a barrel. Let's take a look at a couple of oil funds. Here's the United States Oil Fund, currently down 4 cents to 31.72. This is really just giving a good picture of the obliteration in oil prices recently. It wasn't that long ago when USO was trading around 40 bucks a share. It's now trading around 31.72. But just a lot of people are saying it's oversold at this point and it's due for a bounce. The chart is not giving me any indications that meaningful buying is going to begin anytime soon in this fund, but we'll see. Not something I'm interested in owning at this point. And another gold fund. Let's take a look at OIL. OIL. This is, I believe this is an ETN that's run by iPath. It's the iPath S&P GSCI Crude Oil Total Return Fund. And very similar looking chart to the U.S. oil fund, but oil down 3 cents to 20.65. So oil price is still in a world of hurt. Okay, folks, when we come back, I told you we're going to take a look at some growth stocks rallying today, making a case they want to go higher, but is it a convincing case? That is the question of the day. We'll take a look at names like Under Armour, Chipotle, Intuitive Surgical. We'll do that when we come back, about 4 minutes. Stick with me, folks. We'll be right back.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Let's check in on the financials here. Last check, they were having a good day. The Financial Select Sector Spider Fund, XLF, up 1.6% today to 1357. Still below its 200-day moving average here, so still not clear to me that the financials are ready to turn higher here. That is really the key resistance level to be watching right now for the XLF. And the home builders also leading the market higher today. Let's take a look at ETF that tracks the home builders, the iShares Dow Jones U.S. Home Construction Index Fund. It is outperforming nicely today, but you can still see here a damaged chart, a chart that shows a lot of institutional selling. You had 2 straight days of higher volume declines in the ITB. Volume today looks to be on the light side, so a good day of outperformance, again up 3.5% to 1420, but still trading quite a ways below its 50-day moving average. ITB top holdings, let's take a look at DR Horton. That's DHI on the New York Stock Exchange. Similar situation here, a stock under distribution. Does one day of strength change its trend? Does one day of strength fix the technical damage that has been done? No way, no how. But DHI up 3.4% today to 1498. Let's check in on Lennar, L-E-N. This is another stock really up nicely today, 7.5% to 25.45, but stock that just has more work to do to prove that a new uptrend is for real here. So home builders leading the market higher today. Now let's check in on some other growth names moving. Under Armour, Under Armour I still like here. I still think this stock has potential. It's in a very good technical setup. I like the way it's trading. You can see it's actually back above its 50-day moving average here, not far at all from a high. So, I mean, this is a stock that is just saying, look at me. I'm acting strong. You had a swing point over here of 102.86. Shares of Under Armour today up 1.7% to 98.94. So you see some another recent high over here set last week, which is just over $100 a share. Call it 101 thereabouts. So a move over 101 in heavy volume, and you start to see signs that money's coming in from the sidelines. I think Under Armour has a pretty good chance of working here. You can see how this chart looks a lot different than most of the other growth charts out there. Let's take a look at Chipotle. CMG. This is another stock, again, resistance at the 50-day moving average. It is building a base. Question is, will it be able to successfully build a base and eventually break out to new highs? Way too early to tell. That's the big problem I have with this market right now. I'm open to the fact that we can strengthen from here. We could see a short-term bounce, but with the technical damage out there, it's really tough to believe that we're going to stage a meaningful rally from here, especially during the summertime months. There's just a lot of tough-looking charts out there. Chipotle acting well today, up 1.4% to 402.66. Let's check in on Intuitive Surgical, another stock that to me looks troubled. Up nicely yesterday, extending gains today, up 1.2% to 522.55. It's still below its 50-day moving average, base building stock. Let's take a look at Edwards Lifescience, EW, Edwards Lifescience. Life Sciences, I should say. This is another pretty bullish technical setup here. It's a medical products company that makes products to treat cardiovascular disorders, heart valves, things like that. 87.10 was the swing point right here. If this market were under accumulation, and we're in a market that's under distribution right now, not under accumulation, but this is a very strong technical setup. I'd say the stock would be buyable right here, but I just don't like the look of the broad market still. Edwards Lifesciences up $3.11 today, 3.7% to 87.29. Not too many stock charts out there that look like this one. Another stock showing strength, really not much in the way of institutional selling in this stock for several weeks in a row now. So I like the look of Edwards Lifescience as well. And let's take a look at Biogen IDEC. BIIB. This is a stock that I used to own for my Ultimate Growth Stocks model portfolio. I don't think I've mentioned that on the show yet, my newsletter. We'll talk about that when I get back. But used to be a former holding. I may revisit this one. I took profits when it ran higher and took some money off the table. It corrected in price. Now it's trying to work its way higher. BG12 oral MS treatment. Very high hopes for that. Stick with me, folks. We'll be right back. Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Ken Shreve with you. Thanks very much for tuning in. About 25 minutes left to go in Tuesday's session, and not a bad day taking shape here for the market. Let's see where we're at here. Dow up close to 30 points, 12,131. NASDAQ outperforming by a little bit, up a little more than 17 points, 0.6% to 2777, and the S&P 500 up 7.5 points, 0.6% to 1285. So S&P 500 and NASDAQ performing pretty much in line here. Before we went to break, talking about Biogen IDEC, a former holding in my Ultimate Growth Stocks model portfolio. If you want to check out a 30-day free trial, you can do that right on the homepage of TFNN.com in the carousel there. You can also go to kenshreve.com. That takes you to my TFNN information page, and you can click the green banner there and get 30 days free of Ultimate Growth Stocks. Tuesday is my weekly update day, so I updated the newsletter earlier today, and I send out email buy and sell alerts in between updates. I manage a model portfolio along with the newsletter, so you can see which growth stocks are currently catching my interest. But Biogen IDEC, again, this one has potential. Their oral multiple sclerosis pill, BG12, they're expecting an FDA decision sometime this year. I heard at one point it was going to be around the summertime, but the clinical data have been outstanding with BG12, so not sure that news has been fully priced into the stock yet, but we'll be watching Biogen because it was up yesterday in strong volume. It's following through again today. Let's update the chart here. At last check, it was up about 1.3%. Now up about 1.4% to 132.58. So Biogen acting pretty well here. Let's also take a look at SXC Health Solutions, a provider of pharmacy benefit management services. Nice supporting action so far at its 50-day moving average here. Stock outperforming today, up 2% or so to 89.68. So there are a handful of charts out there acting well, but by and large, there's much more technical damage than healthy charts in this market. I think that's important to pay attention to. Let's take a look at some earnings reports. Today we had Dollar General come out with earnings last night. The numbers were pretty good. Earnings up 31% to 63 cents a share. Sales up 13% to $3.9 billion. Stock did undercut its 50-day moving average today. It's underperforming the market by quite a bit, down 3.5% to 46.81. The news here wasn't that earnings were so disappointing, but the company did announce a big secondary offering, which is usually bad news for a stock because it raises earnings dilution concerns, more shares out there in the marketplace. So dilution concerns here, but fundamentals actually at all the dollar stores look pretty darn good. So numbers were good at Dollar General. Let's take a look at DLTR, a competitor, Dollar Tree, down 49 cents today. You can see still holding above its 50-day moving average here. Technically a very healthy stock, down 49 cents to 101.50. And let's see, FDO, that's Family Dollar Stores, that is also holding above its 50-day moving average here, down only 13 cents today to 67.70. So dollar retailers looking pretty good. All right, let's take a phone call here in Orlando, beautiful Orlando, Florida, and we'll talk to Mary, who wants to talk about one of my favorite retailers. How you doing today, Mary?
How are you?
I'm fine.
I was going to ask you about G&K, Dunkin' Donut, and GNC, if it's possible, because you like both retail store. So I want to know, do you like them or still or not?
Well, I do like Dunkin'. I used to own GNC holdings for the Ultimate Growth Stocks model portfolio, but we'll start with Dunkin' first. The stock right now is outperforming today, up 1.4% to 32.18. It's been trying to firm up at its 50-day moving average. I really like what's going on at Dunkin' a lot. I mean, not only are their stores crowded, but they're still really in the early stages of expansion, even though they've got a whole bunch of donut stores already, and they own the Baskin-Robbins brand as well. So I like Dunkin' brands here. GNC Holdings, for that matter, is also a very well-run retailer, very strong same-store sales growth. Technically, it's a little bit weaker than Dunkin' brands. So what you have are two stocks right now that are consolidating gains, building bases, building cause. I think both of them have a chance of working when this market turns itself around. But if I had to kind of pick my favorite right now, I'd probably lean with Dunkin' brands.
I see. Okay. Thank you.
Okay.
You are
Thank you.
helping me. Thank you.
Thank you, Mary. Thank you very much.
Sure, bye-bye.
Okay, Mary, hey, tracking two very good stocks there, Dunkin' Brands, DNKN, and GNC Holdings. GNC Holdings was another stock I decided to take profits in. I just thought the broad market was looking vulnerable, and I wasn't interested in letting gains slip away. So the game plan with GNC Holdings right now is to, hey, see how the base plays out. It's outperforming nicely today, up 2.5% to 37.40, trying to get back up its get back above its 50-day moving average. There's some resistance in GNC's chart at $40 a share. Now, if GNC can break out over $40 with conviction, we get a good follow-through day in the market. Hey, I would not be afraid at all to buy this one again, but not right now. Still needs to prove itself a little more. All right, so let's take a look at Shuffle Master today too. I wish Shuffle Master. It's not good news at Shuffle Master. Really bad day for the stock. Another earnings problem here. The stock is down $1.75, 12.3% to $12.50. Earnings up 43% from a year ago to 20 cents a share. Big deceleration in sales growth, though. In the latest quarter, sales were only up 10% to 66.1 million. In the prior quarter, sales were up 28%. So big slowdown in sales growth. That's probably one reason. Didn't see the company's outlook, but I suspect the outlook might have disappointed as well. Let's take a look at a good earnings story. At last check, I mean, this stock is well off its high. So let's see what United Natural Foods is still hanging in there. It's up 2.3% today to 51.37. This is a stock showing relative price strength ahead of its earnings report today before the open. Basically, a big food distributor in the U.S. They cater to supermarket chains, natural product superstores, food service firms, things like that. Earnings up 23% from a year ago to 59 cents a share. Sales were up 15% to 1.39 billion. They also gave a pretty good outlook. They guided earnings and sales slightly above expectations. So, yeah, very well-run company here. Price action today a little strange. I mean, it's a very, very big, wide intraday price swing. You can see here it hit an intraday high of 53.99, intraday low of 58.62. So more than a 5-point spread. That's a lot different. You can see this is a stock that normally does not trade wildly like this. So I think its price action today is just reflective of the type of market that we're in here. Kind of uncertain. It's an environment where upside breakouts certainly are having a very hard time making headway. So good numbers at United Natural Foods. Still think that in this type of market environment, new buys are generally pretty risky. Let's take a look at the fresh market. I probably touched on this stock last week when they reported earnings, but boy, I really like the way this name is trading. The fresh market up 1.9% today to 58.19. Earnings again last week were outstanding. You see the big gap up. The big gap up in price last week when they reported earnings, and the stock has just held gains smartly, still showing price strength. There was a big short position in the fresh market before they reported earnings. I think that short position was covered in spades last week when the stock gapped up, and it is trading just very, very well here. A super strong stock with good fundamentals. I like the name a lot. They operate 116 stores in 21 states. Another company still in the very early stages of expansion. If you're kind of considering Whole Foods or the fresh market, I think the play clearly is the fresh market here. I know there's some people that disagree with that, but you just have to look at where Whole Foods is in terms of their expansion. They're still expanding, but just not at the rate that the fresh market is. And fresh market has proven itself to be a well-run company. They're handling their expansion smartly, and I just for a stock play, if you're weighing WFM or TFM, I think the fresh market is the way to go here. Let's take a look at Cirrus, C-R-U-S, Cirrus Logic. Another stock showing good supporting action so far at its 50-day moving average. This company provides audio chip technology for Apple's mobile products, basically the iPhone and the iPad. This one, I think, still has the ability to lead here. It is heavily reliant on Apple for its business. So yeah, that's the one risk here, because it's not clear to me that Apple is going to be able to resume its leadership role in the market. It's not out of the question, but again, let's check in on Apple again real quickly. Take a look at recent price and volume trends in the stock. Apple still basing here, still below its 50-day moving average. Again, if it can get back above the 50-day line, we start to see renewed signs of institutional buying here. That is what is going to be the difference between whether or not Apple leads or not from here. If it leads, it's going to need fresh institutional money coming into the stock. The question is it already over-owned? Are too many funds in the stock? Is there room for more institutional money to come into this name? There probably is. I'm not saying that it can't happen, but anyway, that's what's going on with Apple. And then with Cirrus, a company that is heavily reliant on Apple for revenue. Again, the stock is acting strong here. That's worthwhile paying attention to. Let's take a look at ASPS. This is a thinly traded stock, small cap stock, doesn't have a heavy trading volume, but it is making a really nice move today, up close to 6%, $3.42 to $62.53. You got a swing point here of 63. Altisource's stock. This is actually, well, let me go to the weekly chart here for Altisource. And we'll see that this is just actually a nice technical setup taking shape here. You can see a double bottom, looks like the letter W. Good technical formation taking shape. Stock trying to take out a swing point of $63 a share in heavy volume. But outstanding fundamentals at this company in the latest reported quarter. I think it was first quarter results. Earnings were up 79% from a year ago to $1.02 a share. Sales up 57% to $139.1 million. So you're seeing sales growth accelerating in recent quarters. They provide real estate services, mortgage portfolio management services, offer an array of technology products, but a very interesting company here. Let's move on, take a look at LivePerson as well. This is another stock that has my interest here because of a good technical setup. LivePerson offers cloud-based software that basically helps customers facilitate online sales and customer service communications. Okay, so it's like customer service software, online sales. They cater mostly to small and mid-sized companies, but they do have some pretty big clientele as well. Some big large cap companies are customers of LivePerson's. But an interesting technical setup here as well. Looking for the stock to possibly try to break out here shortly over a. Let's get the swing point here. Looks like it's going to be right around 1765. I think 1765 is the high right in this area here. So think about LivePerson. It is a stock that is showing signs of accumulation. While many stocks are under distribution in this type of market, LivePerson, another small stock. So that's worth noting with a market cap of just under $1 billion, actually about $940 million market cap for LivePerson. But bottom line here, consistent track record of execution. Products continue to see strong demand. Strong stock, trading well. Watch it because it could be a leader going forward. Notice some volume in some stocks that have been beaten down today. Chart Industries, good supporting action at its 200-day moving average here. See, the stock has really been beaten down, goes from about $78 a share down to $61, but it falls right to long-term support. Its 200-day line right around 60. And is trying to firm up there, up 1.7% today to 61.20. It's an energy play, oil and gas equipment maker, so GTLS, showing pretty good price action today. And also PVH. They operate own brands, I should say, like Van Heusen, Calvin Klein, Tommy Hilfiger, also a stock trying to firm up at its 200-day line here. A lot of technical damage. Just not good at buying stocks when they've been hit this hard. So, but good supporting action at the 200-day moving average. All right, folks, Breakout Investing on TFNN. We will be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a 1-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. As we head into the close here, let's I'll just take a quick look at the NASDAQ composite here, see how it's faring. If we're going to get a close near highs, it looks like it. Like in these close near highs for 2 days in a row, the NASDAQ composite is now up close to 22 points, 0.8% to 2781. And let's see if the S&P 500 is trying to move above its 200-day moving average. It's slightly above the line now, up 9 points, a little over 9.7% to 1287. The 200-day moving average for the S&P 500 is 1285. So looking like a close near the highs today. Let's see. I wanted to take a look at a couple of other stocks here. Let's take a look at URI, United Rentals. I know a lot of people that really are embracing this company's growth story, and why not? Because growth prospects are very bright at United Rentals. They provide construction, industrial equipment rentals. Earnings this year, annual earnings are expected to grow 64% from 2011 and another 52% in 2012. What's interesting here is that URI sells at an extremely low multiple. So the market is not giving it any credit for these huge growth prospects. But that always raises a yellow flag to me. Obviously, it's a company that's very reliant on a healthy economy, but really selling at around 14 times trailing earnings, 11 times forward earnings, with growth rates like it has. A lot of people are going to say it's just an extremely cheap stock, but it is a stock that has been under a lot of institutional selling pressure recently. And you can see that in the chart, a fall from about $48 a share all the way down to $32. It is outperforming today, but again, this is a stock that's really been hit hard by institutional selling. That normally takes a while for a stock to recover from. United Rentals up 6.3% today to $32.05. I'd be careful of this one. Do have some earnings reports coming up after the close today. I don't think there's any doubt we're going to see another strong quarter from Ulta Beauty. Shares right now up 79 cents, almost 1% to $87.08. Technically, it's looking weak here. Does a weak chart ahead of earnings mean that the stock is doomed to head lower? Not necessarily, but I don't like recent price and volume trends at all in Ulta. Let's take a look at a weekly chart for Ulta Beauty. As its name indicates, it operates beauty stores around the U.S. and here, I just mocked up a little chart here, looking tired as 50-day simple moving average turns into resistance. So repeated resistance at the 50-day moving average. We'll see what it means. Earnings after the close expected to rise 53% from a year ago to 43 cents a share. Sales are seen rising 23% to $473.9 million. Good fundamentals, good growth, technically looking a little bit vulnerable here. Tomorrow, Wednesday, we're going to see earnings from Cyberonics, CYBX. Stock is underperforming today, down 2% to $37.56. And don't forget on Thursday, another very well-run retailer, Lululemon, ticker LULU. Stock is up 1.9% today to $70.64. Lululemon, just like Ulta Beauty, very well run, great management team, great growth stories. High multiple stock, though, is Lululemon. Also vulnerable ahead of earnings, resistance at its 50-day moving average. So we'll see what Lululemon has to say on Thursday. Also, Titan Machinery reports on Thursday. Coming up next, the Tom O'Brien Show on TFNN. Breakout Investing will be back Thursday from 3 to 4 Eastern. Have a great afternoon, everyone. Talk to you later.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada